Right guys, welcome back to another YouTube video. Today I'm going to be discussing the difference between supply and resistance and support and demand. So the reason I'm discussing these two topics is because it's very popular, and so majority of the people do not really know the difference between these two strategies and what side of the fence they're really on. So this will definitely shed some more light on the differences between those two and what makes them unique to themselves, because sometimes people think support and resistance is the same thing in supply and demand, and so there is a bit of naivety in those people. So starting off with support and resistance, we can see that this is an area of interest where price has shown several signs of weakness at the same level, and it becomes stronger each time the price retests the same level. Okay, so to give you a bit of a theoretical example of what that really means, if you say price is in an uptrend and price is starting to break levels and retest them, at this stage you can say, alright, looking at price action, we can see that this area over here was a level of support. So if I just bring this level over here to make a bit more sense, so we can say that this area over here has tested the level of support several times, which makes it valid, because you're not going to take buys off of this level after the first touch. You want to wait for either one or two touches before then taking buys on the third touch, because it becomes higher probability. Similarly, when price breaks below a support level and retests it as resistance, you want to wait for it to come back and retest it again before then you look for sells, because again it's increasing the probability of price rejecting that level the more times this level gets tested. Whereas if you look at supply and demand, so if we look at supply and demand over here, it's an area of interest where price is likely to reject and become weaker each time the same level is retested. So again, showing you a theoretical example, if we have price in an uptrend, once price comes back into this level, we're expecting a reaction back up. Why are we expecting a reaction back up? Because this level over here would be our level of demand. You can take like a order block over here, and so the very first time price tests specific levels in an uptrend, you would want to look for a reaction off of that level. And the more times price comes back and retests that level, the weaker it gets, the higher the chance that this level of demand will eventually break and fall to the downside over here. So I hope that clears up the difference between supply and demand for you guys. Now what I'm going to do is show you some practical examples here on the charts. So right now we're on the 4-hour time frame on gold. So to give you first a example of support and resistance, straight away you can see that you'd want to have your level of support over here. Why? Because you can see that price has come and shown several signs of weakness at this level over here, and again it is range, it's not a specific level, so you could probably just use a level like that and say that this is your level of support, which it broke back above and started retesting over here. So you'd, after the second touch over here, you could then look for buys from maybe up over here, or looking for buys from over here. Whereas if I show you an example of supply and demand, now with supply and demand you need to understand which levels will give you a reaction immediately. So taking this order block over here, which is the last bearish candle before we see a break of structure of the highs, you can see that once price comes back into this level, into this order block, you get an immediate reaction up. Now me personally, I trade supply and demand because I understand where these key levels of supply and demand are holding for us to then look for sells. So if I give you another quick example from the other side, once we see price break the highs and form a higher high structure, price comes back below, breaking these lows over here. So once that happens, we can then clearly identify that this level over here would be our order block. So as you can see, we do not exactly come back into this region. If we take account in the wicks as well, you can see that price did come and touch that level over here. So this would be a level of supply where you'd look to sell the market over here. Again, the more times the price reacts with this level, the weaker it gets. So you can see over here, although I classify this as some sort of manipulation over here, so I still feel like this level of supply is held. Again, just at the second tap of this level of supply, price has become weak to the extent that it has gone above these highs and violated these highs. And again, if we drag this on further, you can see that price has then come up and grabbed liquidity from these highs. So you can see the pattern occurring. The more times this level of supply gets tested, the weaker it gets and the lower the probability gets. So I hope that summed up briefly what supply and demand is and what the difference between those two are. I hope you guys liked that video. If you did, be sure to drop a like. Drop in the comment section any other videos you want to see, and I'll check you guys out next time.